Hello, everyone, and welcome to the FinDev Gateway webinar, What's Next for Mixed Market? The Foundational Dataset Moves to the World Bank's Data Catalog. My name is Abby Augusta. I'm an editor for FinDev Gateway, and I'm pleased to welcome you to this webinar. Our series of FinDev webinars allow financial inclusion practitioners like you to share lessons and attend online presentations and discussions delivered by the world's leading financial inclusion experts. Before we get started, I just wanted to share a couple of notes on logistics. First of all attendees will have their microphones muted automatically. So in order to ask questions during the webinar, please use the chat box on the right-hand side of the WebEx window. We invite you to submit your questions at any time during the webinar presentation, and we will address them in the Q&A session at the end. In order to ensure that your question is seen by the moderator, select all participants from the drop-down menu when you send in your question. We have over 150 people registered for this webinar, and so we may not be able to get to everyone's questions, but we will share the mixed contact information at the end, so that you can also follow up with them if your question remains unanswered. And finally, the webinar recording and presentation will be available on the FinDev Gateway website after the webinar is finished, and we will also email the webinar recording to all participants. And now I will hand the presentation over to Blaine Stevens, MIX's Chief Operating Officer, to introduce today's webinar and our speakers.
Thank you very much, Abby, and thanks to the FinDev Gateway for hosting us today. Welcome, everyone. My name is Blaine Stevens, and as Abby mentioned, I'm the Chief Operating Officer at MIX, and I'm really pleased to share this time with you all today to celebrate the release of one of MIX's longest-standing initiatives, the Mixed Market Dataset, through the World Bank's Data Catalog. As many of you will have seen from our announcement in September, MIX is expanding its work on the frontiers of inclusive finance with a growing set of catalytic data initiatives in areas such as fintech, digital, and agri-finance, and that apply the learnings from Mixed Market, that microfinance data set operated by MIX, to those new areas that are really driving financial inclusion. As MIX advances in these new areas, we are releasing the full body of data accumulated on microfinance through the Mixed Market Data Service, all the way back from the late 1990s up through September of this year, and making it available to the broad public through the World Bank's Data Catalog. That data is freely available to all users to review online, to download, and use for their research, product development, or other business needs. Part of today's webinar will indeed be to unveil the data on the Data Catalog and show you how to access it on that site. Rest assured, you will walk away with a very clear view on where to go next to access the Mixed Market microfinance dataset. However, I'm going to save that unveiling for a little later in the hour, because this webinar is also a chance for us to reflect on the parallel developments in information and the financial inclusion sector, particularly microfinance, over the last 2 decades, what we may learn from that for the future of financial inclusion. To help us do that, I am pleased to be joined today by 3 panelists who will share with us their perspectives and experience on the question of information and financial sector development, investment flows, and knowledge building. I would like to welcome to this webinar Greta Bull, CEO of CGAP, Bob Cole, lead economist in the Development Research Group at the World Bank, and Henry Gonzalez, fellow at the Skoll Center for Social Entrepreneurship at Oxford and MIX board chair. Welcome to all 3 of you, and thank you for joining this call. To help us kick off this discussion, I wanted to set up and offer up some context on the evolution of information in microfinance, starting with the data itself. When Mixed Market was first launched in October 2002, there were just over 120 MFIs on the site. And that figure, those roughly 120 MFIs, was revolutionary. This was the first time that standardized financial and operational data on microfinance institutions was publicly accessible in one site for MFIs, donors, and others to see and use to form their own data-backed view on the sector. Yet, and that was a far cry from being representative of all of microfinance. And so the screenshot on this slide, besides being a nice flashback to the mid-2000s, is also a great reminder of us of the real accomplishment of those early years, building out the value proposition that worked for microfinance institutions and other sector actors, and that brought them all together around a common pool of data that they contributed to and used. That graph that you see in the lower right-hand corner serves as a reminder of that feat. The number of MFIs with standardized data grew from that 120 at launch to 500 by 2005 and would soon reach 1,000, covering more than 100 countries by 2008. The view on the world of MFIs and their performance had literally grown tenfold in just 6 short years. And that view not only got broader in geography and MFIs, but it also got deeper and richer in the standardized data available. Standardized data expanded from financial and operational information to cover products, offering a much more nuanced view on the credit and savings products on offer. This is not just a portfolio of microenterprise loans, but consumer loans, loans for housing improvement, loans for education, loans to small and medium-sized businesses, a much richer landscape now visible underneath the label of microfinance. And as the sector refined its view on financial and operational performance, it also tackled the social and responsible finance side as well. As the sector developed the standards for assessing social performance, and these were integrated into mixed market, that body of data also grew. From its inception with a handful of MFIs in 2008 to over 1,000 MFIs just 5 years later in 2013. Of course, all that data did not just appear in isolation. It grew with the reinforcing ecosystem that had several building blocks to it. One such building block is a set of standards that I just mentioned. These standards, agreed upon through consultation with sector actors, grew and adopted because they were relevant to their time. The original SEEP network guide on MFI financial reporting from the mid-1990s focused on viewing MFIs not as projects or NGOs, but as financial institutions. By the late 2000s, the latest SEEP network guide on MFI reporting focused on IFRS compliance because this was an increasingly regulated set of financial institutions to comply with IFRS. Another building block of that is in fact information providers. Mixed markets, as a global database, is certainly one of those information providers. But information also came from a much more vibrant marketplace. For example, at national and sometimes regional levels, microfinance associations sought to create visibility on their local markets and also advocate more effectively for their members by pooling, analyzing, and sharing data on local MFIs. And as this phenomenon was not just isolated to a few countries. Over the years, Mix has partnered with providers from APSFD in Senegal to PMN in Pakistan, from the Cambodia Microfinance Network to Copayme in Peru, and the list goes on and on. While mixed market may be the most visible global database, there are an increasingly vibrant local markets for data as well. Part of this reinforcing data ecosystem is also the play of incentives across participants. For MFIs, one interest in participating is to better understand their own performance in the broader landscape of peer institutions. Another incentive is, of course, visibility to potential funders. That incentive, of course, requires funders to come to the table. And if it is this building block that is perhaps most interesting, the creation and growth of structured funds or microfinance investment vehicles that really cemented the mutually reinforcing data ecosystem. Thanks to the initial work of CGAP and the annual surveys produced by Symbiotics, we have a really good picture of just how this ecosystem grew. On this slide, we have a snapshot of that growth, mimicking the growth in MFI data that I mentioned earlier on by just a few short years in lag. From a handful of funds created in the early 2000s to tens of funds created annually starting in the mid-2000s, the funders were literally coming to the table in droves. And as they did, and as these vehicles proved the returns of their offer, the pool of funds grew rapidly as well, from $2 billion in assets under management just around 2006 to $11 billion, or five-fold that, just 10 short years later. For MFIs, there was an even stronger reason to participate in this data ecosystem. And for investors and fund managers, there was a better pool of data on which to make investment decisions. And that pool of data, built on that mutually reinforcing ecosystem and incentives, also added to our knowledge and understanding of the sector. Because research and analysis, just like investments, would be critical to driving the sector forward. In fact, among the tens of thousands of users of mixed market, we know that a strong cohort came from research and academia. And as those researchers drew on this data and combined it with others to answer a range of pressing questions, we know what that looks like. Thanks to Google Scholar, as you can see on the screen, we know a lot about the more than 2,500 citations of mixed market data in published research. Not surprisingly, institutional performance features prominently among public papers. Researchers tackle performance differences by region. They seek to understand the role of competition and performance. They propose models for evaluating productivity in MFIs, or in one of Mix's own papers, consider the synergies and trade-offs between financial and social performance. Key industry events also feature heavily in this research, with papers looking at the rapid growth in microfinance and the relationship to unfolding repayment crises, or analysis of MFI resilience or vulnerability to the global financial crisis of the last decade. And they analyze key features of this market too, including business models and the role of subsidies in microfinance. And the list goes on and on with a myriad of views and conclusions, sometimes conflicting, but with one core common thread: a large, robust pool of standardized data on microfinance institutions from around the globe and over more than a decade of experience to draw on. So, it is against this backdrop that I am pleased to welcome today's panelists for a discussion on information and financial inclusion. Greta, Bob, and Henry, what I just described is just a snapshot of sector evolution and information, particularly mixed market, that so many people, including people on this call, have interacted with over the years. Before we turn to each of your thoughts on that evolution and what it holds for the future, I wonder if you can offer us a little personal context. I am often struck that people that I meet have a very distinct memory of discovering mixed market. So, to you three, I ask you, what was that like for you? How did you first encounter mixed market? Greta, I'd like to kick off with you. How did you first encounter mixed market?
Sure, thanks, Blaine. It's really nice to be here. So my first experience with the mixed market came relatively late in the day, actually, because I spent the early part of my career working on SME finance, actually, mostly in Eastern Europe. And I can remember an early conversation with somebody from CGAP where I was desperately trying to tell them that what we were working on was microfinance, and microfinance was just bigger in Eastern Europe, but actually that wasn't true. So it was a really different space. But when I moved to Latin America in 2006 to join the IFC, microfinance was a huge part of the work that we did. And that is where I, in fact, discovered the mixed market. And it was just so valuable to helping me understand that clients that I was working with and how they fit into the broader landscape, what their performance was. You could sort of understand them in the same way that you could understand banks working in the MSME finance space. So it just really helped me understand my clients in a much broader landscape, and it helped me learn a lot about microfinance.
Thanks, Greta. And we'll come back to that evolution in just a second as well. So, Bob, I'd like to ask you the same question. How did you first encounter?
Thanks very much, Blaine, for inviting me to be a part of this event. It's really nice. Well, I remember quite distinctly how I came to know the mix. It began with a phone call from the then research manager for finance and private sector development here at the research group, Asla Demirgürkant, and she called me on a Friday, and our group to that point had done more traditional research on financial sector development, particularly the banking sector, but also securities markets. And she said, what do you know about this microfinance stuff? It really seems to be taking off. I said, well, I've not done any research on my own in that area, but I read this paper by a guy named Jonathan Mordick at NYU, and it's called The Promise of Microfinance. And so I described it briefly to her, and I asked her, do you want me to get in touch with him? And so I just called him cold, and we started a discussion, and we talked about just establishing facts about what the industry looks like globally and what sort of business models were being used. From there, he said, well, I think the best possible source of data that we could use is the mixed market. And so we contacted Blaine and his staff. I think we knew Didier Thies, but there were a lot of people who helped us, Isabel Beret, Joe Fonseca, Peter Wall. And the problem was for us that these databases had not been created for research purposes necessarily. So we began a discussion about how to customize these databases and emphasizing the importance of time series data, but also trying to systematize things about lending styles, proxies for outreach in lending to the poor and to women, and funding strategies and sources. So Blaine's staff were instrumental in taking what they had and adapting it in such a way that we could use it as researchers. And so we began to look at a host of issues. We began with sort of commercialization, mission drift, and business models at that point. I'll have more to say about that later. But more generally, we looked at sort of financial sustainability in the industry, funding approaches, the role of subsidy. There are a host of issues that these data enabled us to tackle as researchers. Thanks.
Great. We'll have a chance to come back to a few more of those questions in just a few minutes as well. So, Henry, as we round this out, can you give us a quick view into your first encounter with it?
Sure. Thank you very much, Blaine, and good afternoon, morning, or evening to everyone who is attending the webinar. It's a pleasure to share the panel with Greta and Bob. Well, I guess mix has been a constant in my academic and professional life for about 15 years. I encountered mix back in 2004, 2005, when I was doing my MBA at Oxford, and I was also part of the Skoll Center as a Skoll Fellow, and I wanted to somehow find ways that I could research on how financial markets could have a link to social change. And microfinance was indeed the solution to that sort of intellectual quest. And it was also 2005, the International Year of Microcredit. So the momentum around microfinance was there. And as I was actually looking for data, I sort of found someone who had worked at the World Bank and put me in touch with Mix. And then that snapshot that you just presented with over 500 MFIs listed in the 2005 database that you had was exactly what I remembered. And for a researcher, if you have enough data points, that makes a project viable. So that was exactly my first encounter. However, very quickly right after that, it also had a practical opportunity to also use mixed market. And that is that I went to work at Morgan Stanley, and I also pushed for Morgan Stanley to do a few capital market transactions. And after a lot of internal entrepreneurship, if you will, we managed to launch 2 bond issuances of over 110 million for one bond and another one for 100 million. And it was actually mixed market, my mini Bloomberg, if you will, when I needed to make a case to bankers who were working at the syndicate desk, or for investors who were on the other side trying to see if they could buy into this product. It was the data that mixed market provided that somehow allowed us to make the case of why this was an investable opportunity that had a bit of a double bottom line. And that was, I guess, the early days of what is today called impact investing. So that's what I somehow, started. I have not left, or Mix has not left me since then. Fast forward to today, where I'm sort of on the board and really excited for what it's sort of ahead of us with Mix. But also I'm back in academia and I continue using Mix Market, and I'm glad that it's now available at the World Bank. That is a true public good, if you will. So it's been phenomenal to see this evolution, and I'm looking forward to our next conversation on other topics. Thank you.
Thanks, Henry. And I think many people on this call will join you in recognizing perhaps that research questions, perhaps also their gateway, both to mixed market, but perhaps also to careers and inclusive finance. Great. Well, thank you all three of you for your quick intro. I think that background is great context as we have a chance to dig in over the next 20 minutes or so in a little more detail with the three of you. And really, with each one of you, I'd love to focus in on your views on information and sector development. I'd like to kick off with you, Greta. I think you have a really interesting vantage point of where you sit right now at CGAP, but also kind of the span of your career leading up to that. And wanted to get you to reflect with us perhaps on some of the main challenges that you saw information helping to solve in microfinance, or similar sort of developing, not yet mature markets. And do you see these same problems in emerging segments, the ones like we mentioned earlier on in fintech, energy finance? What can we take from that? What's your view on this, Greta?
Yeah, well, you sort of halfway answered this in some of your opening comments, but let me see if I can break it down into a few different categories. So first of all, I think the power of the mix, just generally looking backwards, speaks to the power of data in good decision making. So, in the areas that we work in, data tends to be scarce, not few and far behind, scarce, basically. And so it's hard to sort of find data that can help you make informed decisions. And this goes from, the enterprise level up to the regulatory level. So I think data, when it's done well, can really be a very powerful tool. But I think the way I look at how the mix market contributed to sort of sector development writ large, I would say a few things. So I think when microfinance started, it's a little bit like what we're seeing in the fintech universe today. It's almost like the Big Bang, right? So there's this massive explosion of something happening, and it sort of scatters in all directions. And it's really hard to sort of say, okay, that's a star, that's a planet, that's an asteroid. And so you need to kind of find ways to group things together and categorize them so you can understand what it is that you're looking at. So if I look at the fintech space today, it's, you see a huge proliferation of things, B2B, B2C, B2B2C, all of these different business models. They're doing insurance, they're doing savings, they're doing a whole bunch of everything, and it's really hard to understand them collectively. And I think the same was true in microfinance in its early days. We know this is something around credit, but we're not sure how it looks from, typical metrics perspective. How do we benchmark these organizations against each other? How do we understand them as investors? And so I think the very first thing that Mix Market did was to take a very seemingly heterogeneous space and turn it into something that could be easily understood. It brought clarity. And so that, I think, was a huge value add and set of insights. And what that did was that helped entities operating this space benchmark themselves against an industry. So how am I performing? Where should I be aiming? And what that led to was a few big changes in the industry, I think. And as the industry shifted, people could kind of shift with it and see how it affected other entities that went ahead of them. So the two, I think, big factors in that, which were related, were kind of regulatory insights. So how do I regulate this thing? What is this thing? And how do I put in place a good regulatory framework that helps me help the sector advance? And, I had the good fortune to live in Peru, which not only had great information through the mix on entities in the market, but also had amazing information at the regulatory point of view. And so a regulator that actually shaped that market brilliantly well because they had data on both sides. And so I think that helped shape markets. I think some markets are in better shape than others, but that kind of data really helped kind of push that forward. The other area where I think it really played an important role was in transformation. So when I got involved in microfinance, the big wave was around transforming. So how do you go from an NGO to a regulated entity? How do you go from a regulated entity to something that takes deposits? And that, the ability to kind of benchmark yourself against other entities, I think was really, really important in that transition. A third area, and I think Henry will speak to this a lot more eloquently than I can, but it helped make investors make better investment decisions. So if I look at the off-grid space today, which I would say is, something that, came out of this big technology bang, where you're starting to see a coalescing around clear business models that are really well defined. There's still more work to do to kind of be clear about what those are, because it's sort of an energy services model mixed in with a credit model. But you're starting to see that be better defined, and so investors can make better decisions as they put money into those enterprises. I think it also helped create this impact investing community that made investing more efficient, right? So if I think about the IFC, it's pretty hard for them to invest in every little microfinance institution out there. It's a lot easier for them to invest in a responsibility or a Blue Orchard who can sort of wholesale that for them. So from an investor's point of view, I think it had multiple advantages in helping not only consolidate what the microfinance sector looked like, but what the impact investment space in microfinance looked like, as well as some of the regulatory and changing spaces around microfinance. A couple of other things. I think the mix and the development of the sector helped us really gain a clear understanding of what other market infrastructure was required to make this thing work. So specifically, you saw things like specialized rating agencies emerge, because you didn't see the big rating agencies looking at microfinance institutions, and most of those don't exist anymore, but I think for a time they played a really important function. And I think you also saw a much bigger realization that credit bureaus were needed in the markets that we care about. When you're a bank and you're just serving big corporate clients, a credit bureau is not that big of a deal. But when you have a microfinance institution coming in and sort of pushing the envelope on who gets lent to, then the need for a credit bureau becomes a lot more obvious. And so we've seen a lot of investment and move around creating credit bureaus in the markets that we care about. And then the last thing that I think the mix really helped coalesce was sort of building a community around this asset class, around this business model, and putting some other important standards around it, like responsible lending standards, which I think is really a hallmark of the microfinance industry today. The microfinance industry has tried really hard to adhere to responsible finance. You have things like the SMART campaign that have come out. And that's helped, again, people to line up around a set of principles that mean that they behave in a certain way. And I think that's really important, particularly as we see this kind of influx of digital credit, which is sort of throwing everybody sideways again. And, you know, what is responsible lending if you get into fast turnaround credit card type space? And I think, you know, what the microfinance industry, helped by the mix, was able to do was say, here's what we think those standards should be, and we all sign up to them. So I think there have been a lot of direct benefits, but also indirect benefits that has helped the sector become what it is today, which is, you know, a clearly defined, pretty well delineated sector that has pretty robust investment, pretty robust standards, although occasionally it sort of goes wrong. But for the most part, you know, behaves pretty responsibly. So, you know, I think Mix has made a really important contribution to that. Yeah, and I think I'll stop there.
Thanks, Greta. And I had promised my panelists that they had the opportunity, if they wanted to ask each other questions, but I do have a quick question for you, Greta, because you talked about data and standards as helping create a community around microfinance and how it's evolving. And you also talked about that kind of going from its early phase. You mention some of the changes that you saw happening sort of later on. I wonder, how would you call that out, sort of the role of information evolving around that community from early stage markets to more mature markets? Do you see certain needs arriving earlier on, later on? And in particular, any lessons from that you would carry forward indeed to these spaces you just mentioned? So pay-go energy.
Yeah, I think there are a few lessons, right? So I think as we mainstream and a sector becomes bigger, there's probably less need for those specialized institutions. So for example, you know, I mentioned the credit rating agencies that were focused on microfinance. Those are, I think, mostly now gone. Because I think investors are preferring to do their own due diligence on these investments, and there's enough there to justify them doing it. You don't need somebody kind of coming in and doing it for you. And so I think, you know, there's a need to kind of give the sector a boost initially and then maybe get out of the way. And that I think maybe leads to my other point on this, which is, you know, in the initial stages, it's really important to crowd people in, and there are some public goods that have been important to doing that. But there's also a risk, particularly when public goods are donor funded, to get duplication. And so, for example, in the responsible finance space, we have kind of multiple different things going on, and maybe that doesn't send as clear a signal as we would like. So I think there's a need for some consolidation. I think there's also risk around stranded public goods. So I think, you know, some of those early models that were helping to support the development of the industry just weren't needed anymore, and the donor funding kind of went away, and so they went away, and you still have a thriving microfinance industry. So I think the same process is going to happen with things like fintech, with things like off-grid. I think the kind of challenge that's maybe a little bit new in those two spaces is that technology's sort of turned it into a global hot technology play with, you know, and as we've seen from the Mix's own work on the fintech space, you know, money doesn't flow evenly, but in certain markets there is a lot of investor money kind of flooding into what's not a very well-defined space. So I think there's a little bit more of an imperative to get this right in some of these spaces. And I think also on the things like the consumer protection and responsible finance side of things, because it's moving so fast and there's so much money involved. And so I think, you know, the world has changed a little bit, but the principles probably still apply.
Speaking of money flooding in, Greta, I think thank you for that feedback and comment and view on sort of the lessons learned from microfinance and looking at these new spaces, including fintech, something we're very eager to continue to follow and track ourselves. I'd love to turn it over for the funding and investment view to Henry. Two things at once, exactly. There we go. Henry, picture's up on the screen now. And Henry, I think what's really striking is that portion of your work that you talked about as an investor, having left that research question and dived into the actual investment space. And I would love if you could give us a view of what how you saw data and information supporting investment. What did it look like in the early 2000s versus 2010? How did this information help you, or you see, impact microfinance investing from your perspective?
Thank you, Blaine. I think Greta presented quite clear when there is an evolution, data infrastructure plays a role in that evolution. And I think that was exactly the case of microfinance. I would break it like in three sort of stages where I saw different changes and different opportunities. Granted, just for clarification, my role has been first in Morgan Stanley, where we ended up managing or intermediating about $350 million in microfinance. And then I moved to work at Responsibility Investments after about 5-6 years at Morgan Stanley and stayed there for 5 years. And Responsibility was managing and is managing almost $3 billion in assets. So I want to just give you that sort of background, because here I would be giving the view that is a lot more on what I call the growth sort of segment of microfinance, the most mature, what it was called back then tier one MFIs, if you will, or banks for that matter. So I just want to make sure that that's clear, because I think in some of these new topics that Greta was mentioning, I think the stages are different. It's most likely on early stage or pre-growth, and I think we also need to adjust data needs to that reality, and that's something that Mix is working on. I guess I would say the first phase, it's a bit on proof of principle, and I think data helps a lot in that proof of principle. And that's sort of what I would say from 2005 to 2010 in my sort of years at Morgan Stanley. Having information, having data, using that data as a proxy to a benchmark, because as you know, a lot of the investments in microfinance debt are investments that are made with a total return approach, meaning we do have an expectation of a return, but there is not a benchmark that is specifically linked to that. And I remember at the end of my years at Morgan Stanley, I was working for the emerging market debt desk, and we had a portfolio of local currency loans in microfinance. And the data that I was able to gather from Mix, and also the data that was reported by the MFI, was even used by our valuations committee. So what I mean by this is that in order for an investment, especially if it has a fiduciary responsibility, in the case of asset management, data sort of plays a very important role. First, to somehow make the case that this is investable. Second, to make the case that this data could be a proxy to the market or a benchmark, and also that this data is actually growing. And I remember when I entered, Morgan Stanley, the data set of MFIs at Mix was around 600, and when I left, it was about over 1,000. And that was somehow something that represented a critical mass in order to make investment decisions. Now, I guess the second experience I had, I would say, would go more into what I would call the sustainable and impact phase, where the industry goes into that, and data is important for that. But interestingly, there are other developments, and I'd like to address some of those. Between, let's say, 2010 and 2015, I think we learned of some industry hiccups in microfinance, as we all remember. As Greta said, with the leadership of SIGAP and others, we start seeing some principles and some sort of, I would say, standards that are very important. And it also happens at a moment where I guess Mix plays a role. However, also the growth of the microfinance investment vehicles, the so-called MIVs, which are, let's say microfinance asset managers, and today they are now rebranded as impact investing asset managers, they also start to grow. And they also start gathering a lot of data, because they also need to do their risk management. They need to also do their calculations on valuation. And I think that this is sort of a phase where also people beyond looking at the proof of principle, realized that maybe Mix had some structural, limitations, and that is what it is, right? A lot of people criticize the fact that a lot of this was self-reported. Who is going to be providing a feel of quality to the data? And interestingly, there was not a lot of collaboration across investors to somehow create an entity that would somehow hold some of those standards for investments, but actually each of these large MIVs started creating their own systems and started creating their own MIS systems, somehow replicating some of the things that Mix had already done. And I think that was a missed opportunity, if I could, now with hindsight, because that lack of collaboration or that lack of industry alignment, I think also ended up with the reality, and that is that I believe this must have also impacted the membership of Mixed Market by some of these MIVs. And I recall when I was the head of research and responsibility, we started downgrading our membership with Mix. Towards the end, we were no longer a member of Mix, and that was because for regulatory issues, for data quality, for our own accountability, we had to create our own standards, and we sort of rebuilt our data. We had over 500 MFIs that we were lending. We had a track record of the data for the past 10 years. So this somehow, became a lot more robust. And I would say the last phase, which is where we are today, and I'm in academia again, so I'm able to also take a step back, and I'm also an advisor in other projects. I think we're now in a more, I would say, systemic engagement of industry evolution, and therefore data should also play a very important role on systemic change. And I think this is important because I believe just data for the sake of data doesn't lead us anywhere. I think we do need the analytics, but also now there is a lot more emphasis on impact and why, what do we mean? And as you know, we cannot just take as a proxy of capital flows that this is going to be a successful, or that we're going to be reaching our SDG targets on financial inclusion, which, as you know, are across many of the SDGs. I think today there is a bigger call for data to be more connected to systems that are hoping to realize change, and I see a lot more collaboration. Towards the end of my tenure at Responsibility, I saw one concrete example, and that was we started doing a lot of trade finance for smallholder finance, and we realized that it was a different approach, because instead of these asset managers doing it on their own, they created a council, CSAF, which is the Council of Smallholder Agriculture Finance, and they work together. It's a group of social investors, and then they ask Mix to help us build a product, and they're using it as a cohort of users. And I think that is an interesting example of the evolution. So I think, Mixed Market indeed was fundamental to create, to create the case of why this was a viable industry. But then I also think in the growth stage, there maybe we could have had some changes, and Greta gave a great example of the public good issue, right? And that is, there has to always be an exit to a public good, because you do need to have a sustainability and a feasibility on the financial side. So it's been a phenomenal journey. I think that there's no doubt that hadn't Mixed Market existed, I don't know whether we would have seen the success that we saw in commercialization of microfinance investing.
Thanks, Henry. It's really interesting to hear, even over that span, what you describe as sort of lessons learned and integrated and moved forward. So I'm particularly obviously interested in this collaborative effort amongst the fund managers themselves, and what you see being learned for the ag finance space. Sort of a very short time frame, but quick learnings, I think, on that front as well. I'd love to, if we could, turn now for a last view, because we heard about sort of the sector ecosystems. Henry described this from the investor and fund management perspective. Love, Bob, to turn to you now and talk a little bit about the state of knowledge and some of the big questions that are out there. And maybe just kick this off. What have been some of the key questions that you've seen the research community tackle using data sets such as this? And which ones are still out there that still require answering because the job's not done?
Okay, thanks, Blaine. I was so happy that in your slides you showed sort of the evolution of the mixed data and when we sort of came to get to 500 to 1,000 observations and have a real good picture of what the microfinance world looks like. Well, that occurred in a specific context, a context of commercialization of microfinance. In 2007, Compartamos launches its initial public offering. It's oversubscribed 13 times or something like that. And there were real fears about, mission drift, moving towards more commercial models and shifting away from serving the poorest of the poor. And so researchers began to start worrying about this because, not least because Compartamos' annual percentage rate on its loans was about 90% at that time. And so researchers wanted to see if microfinance was becoming more commercialized. So people used plenty of data sets. For example, Bert Despalie, Mark Hudon, Roy Mersland, and others drew a sample of MFIs that switched their sort of governance status from an NBO to a commercial bank status. It's a very nice study, and it shows that they do become more profitable and that they do curtail their outreach to poorer market segments and to women. So that was interesting to know. But the most important thing about that study for me was they could only draw a sample of 66 MFIs. And so when you consider that those 66 MFIs are just a small part of the universe of microfinance as reflected in the mixed data set by 2010 or so, you became much less worried about these sorts of commercialization concerns. We and others were able to show in our research that most NGOs don't switch their governance type, and they do continue to make smaller loans, and they do continue to lend more to women, and they do so pretty cost effectively, much more cost effectively per dollar lent than commercial microfinance institutions that were trying to serve the same segment. On average, they're much less costly. But that also showed us that they weren't fully self-sustaining. Their revenues didn't fully cover their costs. They largely did so, but it costs a lot to make a lot of small loans. It costs much more than to make a smaller number of large loans. And so we were able to document with new data from Blaine and his group that subsidies or grants and subsidized credit were going to remain an important part of the funding strategy, and for some MFIs more than others. And we can debate whether the allocation of those subsidized forms of funding is always the correct one. But we were also able to show that these subsidies really aren't large because the industry was largely financially self-sustaining. And so we would make an argument that, we should look at these as other development institutions and look at the subsidized forms of credit and see what we would get out from them in terms of good outcomes for households. And we think we've made, even using evidence from the experimental literature, we were able to begin making a case that relative to the benefits you get out in terms of household consumption, these aren't such a bad deal. And actually, they compare favorably to other development interventions. And this can be done at scale, because that's the amazing thing about microfinance, how it can be done at scale. So a lot of great things for the mix, but you ask about unanswered questions. We still have an unanswered question, and it's a question that was right there at the beginning in terms of microfinance. It's the ability of microfinance as a tool to truly increase household consumption and lift people out of poverty. Now, I would argue that that was almost an unrealistic expectation. We had an empirical study by Pitt and Concur that showed in Bangladesh that there were some promising results, and there were tremendous positive press coverage about the ability to lift people out of poverty with microfinance. And now, as many of you, most probably all know, the Nobel Prize went to a group of experimentalists, Abhijit Banerjee, Esther Duflo, and Michael Kramer. And so I should preface my comments by saying that a lot of the people in the research group that I manage do randomized controlled trials, and field experiments have been hugely important in terms of education, deworming, fertilizer application, conditional cash transfers. So I think they've been a hugely important development tool, and I couldn't applaud their efforts more. That said, I think the application of RCTs to study microcredit was sort of a poor fit, because I think the RCTs were conducted in contexts that were not fully reflected in the microfinance world. And they also weren't great for identifying the causal effects of microfinance, because they occurred in places where there might have already been credit penetration. They occurred with commercialized MFIs as their partners. And so what would happen is you'd get low take-up rates in these experiments. And also part of it was that not everyone's an entrepreneur, so you couldn't expect them to have transformative effects. So these sort of low power problems made it very difficult to identify causal effects. But where does the mix come in for this? Without a mix, we couldn't have identified the context in which those RCTs occurred, and we couldn't show that this is not reflective of the industry as a whole. And the true miracle of microfinance is the scale at which it can achieve these benefits that it has. So even though it couldn't answer the questions about poverty reduction directly, it did give us a frame for thinking about how important these RCTs were. I'll stop there.
This is great, Bob. And I think what's interesting about what you just mentioned now, and we heard a little bit from Greta and Henry as well, is the importance of one of the roles of data like this from the microfinance spectrum of context setting. Greta talked about this from the incentives of the MFIs themselves or for the regulators understanding what's going on in the market. Henry talked about this in the valuations at Morgan Stanley in that initial phase, and you talked about it right now as also essential as sort of context setting for other research efforts to be able to place them inside of the larger context of what's going on in the market. I think an interesting thread that came across from those three narratives. Well, listen, I would really like to thank our three panelists here, Greta, Bob, and Henry, for those really incredible insights on information in inclusive finance markets. And I know that everyone is eager for the unveiling, if you will, although, truth be told, it has been unveiled for more than a few hours at this point. So I'd like to turn it over now to the unveiling of the mixed market data set in the home in which you will find it going forward on the World Bank Data Catalog. So to help us do this, we are lucky to have with us Omar Hadi from the World Bank's data team, who's the primary person curating their time series data set. And Omar, we have about 10 minutes now for a little bit of a demo and for an overview. So Omar's going to give us a quick overview of the World Bank's data catalog and some background, and then I'm going to share my screen and show you live all where you can find the mixed market data set as of today. So Omar, over to you.
Thank you, Blaine. Good morning. My name is Omar Hadi, and I'm a analyst with the Data Management and Services team in the Development Data Group at the World Bank. I'm also the time series curator for the Data Catalog. The Data Catalog was launched in November of 2016. It's a collection of resources to provide a more effective means of capture, acquisition, curation, access, and use of development data throughout the World Bank. There are other data sets in the catalog as well. You may recognize we are also hosting global FinDex, enterprise household surveys, doing business, and women, business, and law. Currently, in the past 6 months, in terms of visitations, the data catalog has received 672,000 visits, unique visits, and the data site, the Databank site, which I'll also talk about, has had 852 or 53,000 unique visitors for the past 6 months. You can double that for the year. So right now, the data catalog is broken up into 3 different buckets. There's a time series bucket, a microcredit, the time series bucket, which contains 247 data sets, of which there are 17,000 indicators, also shown as separate data sets in the time series section. There's also 9,000 microdata catalog entries, and there's 1,311 geospatial catalog entries as well. You can go straight into the, Blaine, if you can go straight into, okay, right, well, okay, it's a non-stop, one other thing, sorry, is it's a one-stop shop for our catalogs. So that means that in the past, the World Bank had different links to different resources all over the bank site, and now we've all condensed everything into one site, so it's a one-stop data shop. There's a step-by-step guidance on how to use the data sets, and there's also a dedicated team for curation purposes as well. This is the data catalog. So it's datacatalog.worldbank.org. In the search box, you can just put mix or mixed markets, and it'll take you straight to the data set. Again, here are the buckets that I explained earlier. And the whole purpose is to harmonize collection of data sets, indicators, visualizations. We're trying to make it fully searchable, and we're trying to make it easier for people to deposit their data. We have licenses, classifications, we have multiple countries, multiple resource types. So there's a lot, it's very rich in terms of what the catalog offers. Next slide, please.
And I think we're actually at the end of the slides. Omar, maybe we move over to looking at the data catalog live.
Okay. So do you want to just go ahead and type in datacatalog.worldbank.org? Mixed market is right there.
See my screen?
Yep.
On datacatalog.worldbank.org, typing in mixed markets. There is mixed market data. So I have to say the numbers you gave are incredibly impressive, both from the sort of depth and breadth of the data sets available on the catalog, but also the sheer volume of usage. So doubly excited to be partnering with World Bank on getting this data out to such a broad audience. So here's the mixed market link. I've pulled it up for quick accessibility as well.
So the unique link that every data set gets is the link up top, which encompasses everything. It encompasses both the metadata for the data set, the different resources, the visualizations, as well as the curation in terms of how many times, or citations, sorry, in terms of how many times the data set was used in other papers, publications. So the first one is overview, which is gives a general metadata. Then the data resources just lists all the data types.
We'll pause here for just 1 second. This is great because for all of our users out there, this is what I think we heard on Mixed Market for a number of years, the desire to have access to the data in one click. And here we have it, maybe just a couple clicks, but the entire financial and operational performance data set in US dollars or local currencies, all downloadable in one click. Our social performance data set, company level data, as well as the metadata, the definitions, if you will, for the financial and social performance data, all available in single click data sets.
As a query tool, well, if you want to click down, Databank gives you access to the bank's query tool. Do you want to go hit the visualization first, Blaine?
Yeah, let's look at the visualization quickly. Just a quick set of visualizations. Look for more here. What's nice is this gives a quick preview of different types of visualizations that have been done with mixed market data.
And then the citations tab.
Citations, which I know is going to be visible soon to the public, but has a list of curated citations from the mixed market data here as well. But I did want to come back to, for those who are so inclined, to use more than these one-click download data sets, also a quick preview, what Omar was just mentioning now, of the Databank Access. Omar, do you want to say 2 words about the Databank?
Yep, so this is the bank's main query tool. It's had, like I said, it has up to 853,000 viewerships for the past 6 months. You can double it for the year. We've made this particular data set a 3-dimensional data set. So it's a country, indicator, and time. Blaine, if you want to go to the demo in terms of what country you want.
Absolutely. So we've just landed on the data set, on the query tool. Databank means it is housing, in fact, lots of data sets, as you can see here. This one's already been selected for mixed markets by the link that we just showed. There's 3 steps to the process. You don't see MFI or FSP or anything like that in here. So if you're looking for the institutions, they're under the country, so it's sorted by geography. So you can see, I'm just going to go down here and show for Bolivia, for example. Expand that. You can see the various MFIs that are in the data set. You can see that for every one of the countries. You'll notice this 6-digit number. This is the mixed market identifier for each of these institutions. So for those of you who are used to using that, it still persists in the World Bank data set as well. So the first step is to choose a country, and in this case, MFIs. You can select all just by going next to the name of the country and selecting all of them. You can choose them individually. You can also just look them up using keywords. But for sake of today, I'll choose just all those in Bolivia. You see there's still a couple steps left. Series refers to the data point. So what data point are you looking for? There's over 250 data points in here. So I'm not going to scroll through all of them, rather just to choose something that I think this audience will be familiar with. I chose portfolio, so pools of everything has portfolio in it. Gross loan portfolio. Note here that you can get access to the definitions. So the metadata are there. This is in US dollars. Remind you of the source. Let's choose gross loan portfolio for this. And then the time. So what period are we looking at? With the mixed market data sets, we have access to both annual and quarterly data. See if the data bank's going to cooperate with me. Great. So you can see annual and quarterly. Right now it defaults to the annual ones. You could also choose any of these quarters, and yes, there are a lot of them. I will choose all of the annual periods. I could choose them individually. You could choose it by bucket here. I'm just going to choose the select all to get access to all of them. So I've chosen a country with MFIs. I've chosen a data point, gross loan portfolio. I've chosen the periods, all available annual periods. I'm going to choose apply changes and let the data set do its work, or data bank do its work rather. And you have now a preview of the data for that data point and those institutions, which you can download in Excel, CSV, or tabbed text data. And there's also the metadata available from that as well. Preview of how to get access to that. Click download, and away it goes. Relatively straightforward. For those who might have queries or questions on the data catalog or the data bank, you'll note that there's a help function down here for those accessing it directly from the data catalog. Do look that there are 2 links here on FAQs and getting started. Very helpful to orient you with the overall data catalog. As a reminder again, the data is at datacatalog.worldbank.org. Away and ready to start.
And one last thing is we're supporting API functions and bulk downloads as well, and that will most likely come out early next year.
Great. So continued development for accessibility of the data sets overall. Thanks, Omar, for joining us, and thanks for that quick overview. Very much appreciated. Great. So I know that we've had some questions on the chat box. So let me go ahead and address the one that seems to have gone back and forth here. So first off, people seem to be very excited about the accessibility of the data set. We're really pleased to see that. This data set is going as I mentioned, historically, over to the bank's data catalog, free for anyone to use to continue research, product development, other business purposes. So here we have indeed a use case from one user, and we're very excited to see that. The data set from the mix side will not be updated through the World Bank's data catalog. So this is indeed a static data set at a point in time available from all the data collected from Mix for the mixed market platform and product, made available now from everything back from the late 1990s all the way through September of 2019. We very much welcome your digging into the types of questions that Bob just mentioned now, learnings that you can carry forward into the new segments that Greta mentioned as well, and of course, analysis as well that will help stimulate this data market overall. So before we close this webinar, before I hand it back to the FinDev Gateway team, I really just wanted to acknowledge all the many listeners who are here today. I know that for many of you, you are part of the tens of thousands of users who've used the mixed market over the years. And so for that, we'd really like to say thank you because you are really part of that community that Greta described. You created the commitment, the energy, and the engagement that made mixed market a powerful tool and a powerful data set for that community of actors. I'd also like to say welcome to all of you because we look forward to continuing to work with you to create the same type of data ecosystems in the expanding frontiers of inclusive finance. So thank you and welcome. And with that, Abby, I turn it back over to you for final thoughts.
Great, thank you, Blaine. I have just opened up a poll on your, it should show up in the right-hand side of your WebEx, so if you can take a moment to respond to the poll questions to give us feedback on this webinar. And before we close, I'd just like to mention what's next. As I mentioned in the beginning, the recording from this webinar and the presentation will be available on the FinDev Gateway website within a few days. We will send a follow-up email with the recording to all of those who registered, and please feel free to share this with your network. We also invite you to visit the World Bank Data Catalog, as was discussed in this webinar, where the mixed market data is now housed at the link which shows on your screen. If you have a question that we didn't have time to get to during today's webinar, feel free to follow up. You can contact Mix at the 2 emails also included there on the screen. And finally, of course, for more financial inclusion resources, please visit findevgateway.org. Once again, a big thank you to the presenters and to all of you who joined the webinar for your interest and engagement on this topic. Thank you very much.
Thank you to the panelists and to the audience for your attendance.